What's up? I'm Dan Friedenberg, and this is another chance encounter. Hey, what's up? I'm Dan Friedenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Friedenberg, and that there is a commercial real estate building. I'm joined today with Matt Jones. Now, do you pronounce your last name Jones, or is it something more? Yeah, is how you do
No,
it?
no, I just straight up.
Just straight out Jones. It's not Hon. Yeah, I'm just trying to think.
Jonas, yeah.
Right? Anyway, but how you doing?
I'm doing fantastic. How about you?
I'm fantastic, but I got a reason for that, and that is because my very favorite audience member has joined us today. And why is my favorite audience member here? Well, this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, and all that kind of stuff. And why would I do such a thing? Well, part of it is because it's the law. If you want to get access to private deals, then you have to have a documented prior substantive relationship so that when the SEC checks out your business, they'll make sure that you're all on the straight and narrow. So I have to meet everybody who's in this industry in these circles and whatnot and find out what exactly is it that you're doing in these deals, what kind of deals are you comfortable with, and that sort of thing. But before we get too excited and into the details of what you're up to in your business, Matt, do you want to introduce yourself a little bit?
Yeah, sure. I'm an LP in a couple of syndicated deals, and I did my first capital raise for a 229 unit deal this past year. It would okay, and I'm actually looking to do some more fundraising for future deals through the fund of funds model.
Sweet, that's awesome. So the first section, though, that I want to go through is the distinct motivations. Before I do that, I always have to say, but wait, check your eight. And Matt, I know you're in podcasting and whatnot. I don't know if you can see through your camera, and then at like the 8 o'clock, it's the audience is 5. There might be this awful, hideous red subscribe button that they haven't hit yet, and I'm not sure if you could see. No, it's just a stupid joke I always do. But the 5 distinct motivations. I've met a whole whack of different syndicators, and they all have a different version of why they're in this. But my most important part is knowing, why is somebody going to go through the effort and time to make their next acquisition, because there's all sorts of problems that can come along with it. So I found the first reason why some people are making their next acquisition is because they're preserving their purchasing power. And what that looks like, that's for people who already have a portfolio of assets, and the profits that come from ownership is how they make ends meet. And when that's the case, you're not going to be in the business of getting rid of performing assets. So why are you going to be making another acquisition? Well, one situation is if inflation rears its ugly head and eats away at the value of the cash flow that you're getting. That's one reason. But the other one would be if there's an asset crash and you can buy at a steep discount, that's when they're going to do it. But this is not me. That's not really how I describe my situation. Personally, it's trading time directly for wealth. Now, I have a background in technology. That's what the 506b part is all about. I've owned a CRM agency building online funnels since 2010. So what I'm up to, though, is I realize that the way the tax code is written, if you are earning salary or wages, you're paying more in tax than anybody else. So it hit me, how can I pivot to kind of, go along with what the government apparently wants us to do? And so that made me want to work in return for deployed capital, aka equity. So that's why I'm doing this. But many people are attracted to commercial real estate because they want to take control of their schedule. Now, maybe that means they're fast tracking retirement, or maybe it means they want to work fewer months per year or fewer hours per week. But whatever it is, it's more of a scaling back is the reason why they are doing this. Whereas my next group, they're just plain ambitious. They're looking to buy up their entire hometown. They want to get that generational wealth to make sure that their great grandchildren never have to hold a day job. And that's great, because the people like this, they're going to be hustling into their 90s. So you're not going to have anybody who ends up dropping the ball for that reason, if that's their why. But the last group, they have the similar level of what do you want to call it, motivation, but they've picked a sector of society, or maybe it's animals or the environment or whatever it is. But they figured out if they want to make a really big impact, there's a financial component to it. So you have to have a lot going on financially. And so that's why they are making these commercial acquisitions. So as far as you're concerned, Matt, out of those 5 different motivations, what jumped out at you, and do you think describes you best?
I would say I'm 75% fast track to retirement and 25% helping people who need it.
I love it. I love it. I don't know if you want to expand any of that, like if you have any particular groups. Some people love helping residents. Other people are trying to, like get into like affordable housing areas. Like, do you have somebody in mind, or are you trying to wait until you like kick that can down the road and then find out who the best recipients are?
Two groups of people, and I guess they wouldn't be directly, benefiting from the real estate, but rather the cash flow, the money that is obtained from the real estate ownership, and that would be people who are unhoused, as well as people who have disabilities, specifically developmental disabilities.
Yeah, that I love that cause. It's so important because like all of us people who are very talented, we have to work our buns off just to live in comfort. So the people who just don't even have that opportunity, they really need the extra help. But there's a lot of risks involved in commercial real estate, and I've seen a lot of securities attorneys. They have this questionnaire that they have investors fill out, and I didn't like the question about risk because I don't think the answer to that question really proved to me that the person respects the amount of risks and the types of risks that are involved in this. So I have this fill in the blanks question for you here, Matt, which is there are many popular investment asset classes, but I think blank is too risky. What's too risky for you, Matt? It can be real
I'd,
estate or otherwise.
I'd
Sorry.
say the new and emerging cryptocurrencies that people just do pump and dumps, and that's for me, it's not even worth bothering looking into.
Right. Yeah, I love that. It's having those fundamentals, and not to mention the tax benefits and all of that. But when we get to back to commercial real estate specifically, my thing comes on and promotes you to encourages you to subscribe again. This thing just kills me. I just started doing this a few weeks ago. But
That's fun.
anyway, nice. So, but what I do in the next segment here is I go through the dandoesdeals.com commercial competency cube, and the whole purpose of it is to make sure that you understand how my guest fits into a commercial real estate deal, but also it'll help you effectively communicate on the subject of commercial real estate. So that's why I take 2 minutes in every episode to go through all 6 sides to make sure that you actually understand what these people are doing. Part of it is it also helps you tell if they're blowing smoke. But we go through every single episode, every single side in every episode. So let's do that. Starting with the repositioners, who are acquisitions people. They acquire it. They're picking up the deals. They're finding the deals. They're looking at a bunch of different deals, and they're doing a bunch of paperwork. What is it, this paperwork that you're talking about? Well, the first thing they have to do, there's a fancy word for it. They have to underwrite the deal. That means they need to do the math. They need to do the math because they need to find out if the seller/broker is even telling the truth about how much this business is actually making. Because the way that the bank looks at the amount that the property is making is different from how a lot of regular people would. So the repositioner is underwriting it to make sure that they can make the business make money. But the repositioning part of that, it means they're making changes to try and find more upside. And the first place that they're going to look, every repositioner has to have some financier relations. Matt, you mentioned a fund of funds, which is a financier role. Financiers in general, they only deal with paper and with money. And if you want to be a general partner in the ownership of the buildings, then you're going to have some asset management roles. But really, if a repositioner can get more advantageous lending, that goes straight to the profitability or bottom line of the business. So that's going to be one of the things that the repositioners are going to try to do. But the next step, the more intuitive one, is making operations more efficient. You stop those Benjamins from going down the toilet. But of course, there's more to operations or asset management than just unclogging toilets and collecting rents and mowing lawns and all that kind of stuff. One of the things that I bring to the table that's a little bit unusual is the marketing side, and that comes in handy if the vacancy rate is showing some trouble. Even if you are outside outsourcing the actual property management, that's something you might run into is you just can't fill the units. And that's where one of the ways that I come in with my automation skills and copy creation. But because commercial real estate is so competitive, chances are the repositioner won't be able to find enough upside in just making operations more efficient. So frequently they'll get a contractor team involved to do a value add or renovations on the units. The idea being is that if the units are nicer, then new residents will be happy to pay more than the previous ones. But you can really spend the whole farm just on contracting. So you got to be super duper careful about that. One thing that repositioners do, if they're like me, and I don't know if you know about this about me, but I'm from the internet. Okay, so that means I need locals. I need boots on the ground. I need somebody who can be there in an hour or two, because that's not going to be me. I'd still be stuck at an airport in an hour or two. So you need the local to keep an eye on the contractors, keep an eye on the operations, make sure that you're actually performing and they're not cutting corners. And then what's going to happen is when the repositioner has figured out which deal to take over, and the entire team, they're going to turn around to the financiers and say, hey, I'm ready to take over this property. Let's say it's 350 units and tens of millions of dollars. Hey, financier, you want to lend me, say, tens of millions of dollars? And the financier is going to have another question on their mind, the banks, the loan officers and whatnot. And the big one is going to be, who is your sponsor? So let's say you have a group of wealthy friends, let's say you're a physician or something like that, and you want to take over this 350 unit apartment complex. That's all well and good. But if you want to be eligible for a commercial loan, somebody, the sponsor, has to already own a similar asset. And a lot of gurus and coaches, they kind of gloss over this piece, because if you don't know any other sponsors, then they're your sponsor. So you're going to need somebody who owns a similar asset. You're also, among the ownership team, you're going to need a balance sheet of at least the amount of the loan. You're going to need a bit of liquidity. But if you have all those pieces, you've got yourself a commercial real estate deal. So Matt, I get that everybody has repositioner duties. You mentioned the fund manager financier piece, but in your own words, how would you describe your core competencies and roles in your next deals?
Repositioner, I can find deals, I can underwrite them and put out LOIs. But then, I'm shifting more to the financier. And I mentioned fund to fund. So that's coming in from the LP side of things as a fundraiser. So, which means I don't have to have asset management duties, which you would have if you went through the GP side of things. And through the fund to funds, I'm able to negotiate with syndication sponsors to get a little bit better rate of return, because I'm bringing in a big chunk of money from my group of investors. And that way my investors can do better by investing through the fund than they could directly with the syndication.
I love it. I love it. So let's talk about ideal properties then. When investors or syndicators are saying, what's your ideal property or what's your buy box? They're really asking for three main things. First one's geography. Which states, which counties, possibly even which neighborhood. It's absolutely going to matter. Okay. The second one is going to be the size of the deal. We generally discuss multifamily in this show. So that means unit count is the way that we judge size. And the reason why it's important is because you're going to have a different type of crew taking over 15 unit apartment complexes compared to 150 or 350 unit apartment complexes. So that size definitely matters. But the third one is called class. And I separate class into two separate words. The first one being condition. So the condition of the building is how old is it? How beat up is it? How up to date is it? How many luxuries and amenities there are, or if it's just no frills and that sort of thing. So that's the first meaning of class. The second meaning of class I call area. And when they're asking about the area or discussing area, they're talking about what's the crime rate like where this property is located? What is the amount of traffic that goes nearby? What are the school districts like? And both of those different meanings of the word class are given the same rating system as in grade school, where you got A plus at the top and then A and then A minus and then B plus and so on. So Matt, as far as your organization, your fund goes, what are the sweet spots?
Well, we really like the Carolinas, Kentucky, and Tennessee. I mean, there's other great markets out there as well, but anything in those states with MSAs or metropolitan service areas of 300,000 people or plus, because we're looking at 100 unit plus properties, and in those bigger metros, then you have options with contractors and property management and whatnot. And then also we're looking at value add plays. So specifically, a C property in a B neighborhood or a B property in an A neighborhood where we can reposition it to bring value. We can force appreciation by doing those renovations. Not so interested in D properties or like C properties in C neighborhoods, just because there's no meat on the bone, so to speak. Like you can only fix up the property so much. If over renovating is just a waste of money.
Definitely, definitely. It's really hard to ROI on a gold-plated toilet, right? So, but that brings me to my next question, which is who you are disproportionately well suited to help. And once again, I'm going to go back to the dandoesdeals.com commercial competency cube. Don't forget you can download your own copy of this for free at dandoesdeals.com. I don't even ask for your email address. It's a really, really bad idea from a marketing perspective. You should always ask for contact information, but I don't, because once again, I want you to be able to effectively communicate on the subject of commercial real estate. But for me personally, I find because of my unique skill set, the sponsors and KPs are the people who I'm generally disproportionately well suited to help. The other ones would be the locals, which was pointing right at you, which is why I couldn't find it. But that's because I'm from the internet. And even though everybody is so eager to help each other, nobody is going to be all the sides of the die for any meaningful amount of time, and that's why we're so great at helping some people more than others. Matt, you said you have your fund, and that's what you're up to, and so you can go ahead and say like, hey, you're looking for investors, as long as it's a 506c. But if you want to just stick to beginners, that's fine. But who are you really looking for? Who can you help more than anybody else?
I guess two groups of people. So I'm looking for investors that are you may be too busy to put in the effort to find sponsors and vet them and understand the deals and go through the underwriting process for them. So I essentially do the work for my investors. I find and vet the sponsors, and I find and vet the deals as well. So I'm looking to connect those busy investors who have capital but not time to I'm also looking for the sponsors and the deals as well to be able to put those together.
Beautiful. And then as far as how to reach out, I got a really distinct last name, unlike Matt, but that makes it really easy to find me. And LinkedIn is the best platform for that. But the QR code, if you scan this code with your phone, that's going to bring you to the FAQs page of 506BME, which is a service that uses the Dandos Deals Chains and Calendars as its backbone to prove that you knew your investor lists level of sophistication, appetite for risk, core competencies, and all that sort of thing, and is verified by a third party. Because I'm always up for a party. But Matt, if people want to reach out to you, is there a website that's best, or is it a social media platform? How should they reach out?
Oh, they should go to my website, hawkwingcapital.com. And through there, they can find out what I have going on with real estate. They can get connected with my podcasts. They can even download a free chapter from my book called Book About Real Estate.
All right, beautiful. And so then the last question I have, or the last thing I have to mention, is actually not for you, Matt. It's for you in the audience. It's a public service announcement, which is if you've been watching this episode and you've been noticing these searing, fiery pains in your eyeballs and like migraine-like symptoms, it's probably the hideous red button right here that says subscribe, and you can get rid of it really easily. You just click on it and it turns gray, and then like all of that'll stop. And of course, I want you to do it just because it means that YouTube might actually start to pay for these videos instead of me. And I think that would be amazing. And the trade-off for you is it means my videos might show up on your list of suggestions. But as far as I'm concerned, you can go ahead and ignore those suggestions. I just appreciate the fact you spent this time with me. Just like Matt, I appreciate you joining me today. This has been great talking to you.
Yeah, great talking to you too, Dan.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah. It's funny.
Nice meeting you.
You too.
506BME, everybody.